This is what we call it as $2,000 a day chart. What do I mean by that? When we talk about in the training sessions, all the webinars, all the classes, everything, we talk about in terms of our goal is to help the traders and train the traders to make on average $500 per day with just one contract and then just one setup. But if you follow the same setup, same rules, same kind of rules, everything, you'll once in a while you will hit the days where it will give you the entry after entry after entry, and then those days we call those as like a $2,000 a day. That means every day try to make like $200, $500 per day. But if you for there are days you will hit once in a while, at least once in 10 days or once in a week, you will see the days were trending, and then especially with the level 2 order flow, you will see the entry after entry consistently, and also when it also shows you the signs of when you should really stop. That's another big thing. This is one of those days. I'm talking about the chart from October 9th. I'm recording it on October 10th. That means this is yesterday's chart of ES futures using BSG liquidity zones. Let's get started. So first thing first, when the market started, you can see the market is like the sell side liquidity is here. There is no buy side liquidity, but it formed later. Even though it started really slow, it picked up really around like a 9-10. But you know what? I wanted to show you something really important before I go to the chart, because when I did the review of the trade review last time, I got a lot of feedback, suggestions, everything. Thank you for all the emails, because those are things motivate me to do what kind of videos I can help you with those things, and also the questions that I get. So some of the questions I got was, when we talk about some of the charts, what are the different ways you can read the price action? So let me explain that a little bit. So let's start with in terms of, let's say, um, whole market doesn't matter what kind of trending day or choppy day. I want you to look at the market in terms of rectangles. What do I mean by rectangles? If you look at the market structure courses, but in a lot of books, even the Richard Wyckoff, even like some of the older like Dow theories, everything, it follows one single pattern. Market does not move in a straight line. It always moves in kind of consolidate, move, consolidate, move, consolidate, move, consolidate, move, consolidate, move, consolidate, move, and then move. This is what market does, right? So when we say always look at the market in terms of the rectangles, I'm talking about those consolidations. This is what we look for. The reason is that these rectangles are the one you look for, and then anytime you see consolidation, I want you to get excited, because when there is a consolidation, there is a breakout. Okay, when there is a consolidation, there is a breakout, and then the way it breaks out, if it follows our rule, that's what makes that the perfect entry. If there are some rules we don't like it, we don't take the trade. So that's why you need to stick to the setup, stick to the rules, everything. So first thing first, I want you to look at the market like the rectangles. Market goes and then bounce on back in a certain range. You can clearly see in the market in terms of the sell side liquidity on the top. Okay, sell side liquidity on the top on those rectangles, and then you should also see the buy side liquidity on the bottom. All those things. That's how you should see the market. Now, this is the most important part. Now, let's say we find the rectangle and then we look for the pattern. So in that case, I wanted to go back and show you something a little bit, add some clarity on the perfecting the breakouts. Okay, so in that case, let's say the market moves like sideways, not like this, something like this, and then you can, if you can see in terms of, there is a liquidity right here, and then there is a buy side liquidity right here. All I'm looking for, okay, I wanted to see a rectangle, I see a rectangle. Okay, that means I'm ready. Be patient until it breaks out. The way it breaks out is the key. Okay, so that's why I wanted to show you different examples. Ideal way we teach in the webinar is price breaks out, take the liquidity out, and then come back down, and then it don't enter the trade when it's coming back down or going up. Enter when it's reversing, touch almost near. You see the sell liquidity right there? Price came back to that level and then reversing. This is what, not exactly in this line, but very close. This is what we call it as golden trade entry. If you see it, take it right away without hesitation. This is what we teach in the webinar. But market does not give everything in a gold platter, right? I think we need to see things that's not very obvious. That's how we became traders. So let me give some examples in those cases. So same kind of thing. If you look at the market, when how the market moves, if the market, okay, let's see, and then go back. Let's say the market moves and then takes a liquidity. Okay, after taking the liquidity, it came back down immediately and then stays in the same level. This is one case. Another case is, okay, let me add one more case. The market moves, and then liquidity is right there. Rather buy sell liquidity here. Now if the market also can go break through the price, go up, and then stay right there. Okay, let me draw one more because I wanted to explain a little bit. Be patient. Excuse my drawing skills, but it's key. All right, so let me draw the third cases. Okay, let's say this is the different kind of consolidation we're looking for, and then other case is that. All right, so I draw three different cases. Now the way I look at the market is that after the liquidity is gone, after the liquidity was taken out, what is happening to the price action? Okay, I know we talked about in terms of how the market goes up and come down golden, but sometimes it's not golden. So I use this kind of cursor, plus cursor. Why? If I use take the plus cursor, align the horizontal line to the sell side liquidity, and then look at that one, look at the price, all the bar bodies are staying below even though liquidity was broken. So that means price is struggling to, even though it's taken liquidity out, struggling to go above this level. That means all the body stays there. This one I won't take. Okay, this particular if the price action does like this, I really don't want to take that kind of trades. That's why these cases I don't take it at all. Okay, let's take the next one. Next one, if you look at this one, same way, if you take the plus cursor and then place it right here, what you can see is after right away price broken, even though it's not doing what I'm supposed to do. What do I mean by that? Ideally, I want to see in terms of prices should go up and then come back down and then go up, right? But even though that's not happening, what's happening here in this case, uh, price broken through the sell side equity, and then all the bar bodies above this sell side equity level where it was broken, it's staying there. Still I will take this trade. Why? It stays above, it's not going down. That means there's a support in there. I will take this trade. That means this is a setup, you can still take it. This is a setup, you can still take it. So let me draw a okay, yes. And then there's a third case where it's completely different in terms of it's not staying below this liquidity or staying above. It's going zigzag across, going out, coming inside, going out, coming inside. This is, I don't want to say it like a don't take it or take it. I have to be patient. Don't give it up, don't take it. Both ways. I have to wait and then find out what happens after this price action. In the sense, eventually the price will go down and then go up, or it can come down, go down. So it can happen both ways. That's why I have to wait and see what is happening to the price action. If it is eventually going up, I will take it at a later point in time, but no, if not, I won't take it. But this is a good setup. This one I won't take it. This one, if you want to ignore, you can ignore, but I will take it a little bit late based on the price action. So remember this, because I'm going to show something very interesting how this plays out in the market. All right, so now let's look at the market in terms of the golden day, October 9th trading setups. Okay, so now now look at the market. Market opened, sales and liquidity was here, basic liquidity was here. I was waiting for the market was just going back and forth, um, right? I think back and forth, and then this is what in terms of finally the sales was is broken. Remember I talked about sales and liquidity after broken, it's going zigzag like this. I won't take it immediately. Eventually, you can see the price started. There is a price action. You can see the trend line right there. That means eventually it's going up. I will take it late. So this is what I'm talking about, the third setup that I showed you. But one other conference is that you can see the price went up almost here, came back down, and then goes up. Where is that happening? Exactly on the sales and liquidity. Okay, even though it's delayed, but still the it's happening little bit late. Anytime the price goes into the same range below the sales and liquidity, please don't take it, because it might go into or even drop down after this. Don't take it. You need to see the price action go up and then come down, and the rejection happens. So in the case, the first entry happens right there. This is my first trade entry. All right, this is number one. Okay, number one. And then what happens to the market? And then new sales and liquidity is forming, and then price broken through. um, this one I will still take it, because this is went up and came down and go back. This one is referring to this sales and liquidity right there. Okay, so still this is number two, second entry. Okay, and then our other setups are, this is setup number one, sales and liquidity taken over by the buy side liquidity. It's another confirmation. If you miss it here, you can still take it here. And then look at this beautiful setup right there. This liquidity was from the morning. This strong liquidity is from the morning. It took taken out from the huge price action. Do you see this huge price action? It went up there and then came back down. Where does it come down? Exactly on the sales and liquidity side where it was printing. Exactly on there, and then goes up. This is the fourth trade setup. Okay, this is the fourth setup. And then again one more time the price has gone back, then again it go back and then come back down to same liquidity level. Is going back five. Okay, so uh, you can see here's a sixth one, this is fifth, right? Look at this sales and liquidity again got broken, came back down and then going up. Where is it happening, this pullback? Exactly on this level, on this level. This is number six. This is what I'm talking about. Market will give you multiple entries certain days. If there's those days, you got to take it. So one of the best way to maximize those things is that not to okay, how to stack it. What do I mean by that? Let's say you enter the trade already here. Okay, you're already in a trade. Second setup confirms you. Okay, this is another opportunity. What you can do is you can add a contract. Initially your stop was here. Okay, I will draw the stop in a red line. Okay, so initially your stop was, I will maybe in blue. So initially your stop was here. Once you see the second setup, this pullback, you move the stop right there. Okay, and then, oh, very steady green right there. Okay, so and then you can move your stop right there, add one more contract here. Okay, and then there is another setup here. Move your stop, all the consultant stops, move here, add the another contract, and then you keep on going. Okay, I'm going to erase this, and then I want you to see something very, very important. Since our first entry started, look at this. Order flow zones printing only blues, showing the trend is still continue, is market is still in the uptrend. You don't have to exit. If you watch one of all my trade videos, I focus on the trade entry, I focus on the stop loss. I never focus on the target, because I won't I don't believe in the fixed targets, because I want the market to tell me, I want the price action to tell me it's time to exit. Until that time I really don't exit at all. That's why my targets always I don't focus on. I focus on entries, I focus on stops, I focus on trade management, I focusing on where to move my stop next, those things. I rarely focus on target, because once the time to exit, I will know. Okay, now is the time to talk about time to exit. Okay, now I wanted to explain one more thing. Let me use this space as the drawing board again. I want to explain something. When the market when the market moves something like this, that means you can clearly see in terms of sell liquidities keep on breaking, keep on breaking, keep on breaking, keep on breaking, keep on breaking. Eventually, there will be some sell liquidity it will reach, and also you can see buy sell liquidities keep on coming, keep on coming, keep on creating, keep on creating. Okay, so when there is a reversal, initial signs of reversal is I want you to see what happened to the price action. So in this case, I think I'm going to erase this one. Okay. So when the price action, go back to the drawing, and then let's say there is a huge liquidity here, and then price, it goes there and then breaking this liquidity and then come back down and a pullback immediately sells a liquidity taking over the control again, take over the control again. And then what happened to the price? All this time it will create a higher highs and higher lows. Suddenly you will see in terms of price will creating lower highs and lower lows. Most importantly, we are using liquidity zones. That means until now, sellers are getting lost, getting killed. First time you'll see sellers control was regained. They lost the control, but they retook the control what they lost, and also they are moving the control back down. They're taking over the lost territory again, and the lost territory. This is what we call as reversal. The first sign is really the re-establishment of the control. Second confirmation is the movement. It moves the control down. This is what we're looking for. With that in mind, look at this particular trend. It was killed, like killed everything. That's we are losing, the sellers are losing, sellers control was keep on losing, right? Buyers control was keep on moving. They are moving, and then buyers control was moved here, and then they could not move up further. I want you to watch this particular area, this one I was talking about. Okay, and then this one. What is the first one here? Okay, what is the first one here in terms of what happened to the market? I'll go back. All right, 1 second. All right. You see this price took down the liquidity, it's gone, but it was small pullback, they are coming back. Watch this. All this time sellers liquidity was gone. They were not able to reestablish at all. Even on the pullback, there are a lot of pullbacks. Look at this pullbacks, this is pullbacks, this pullback, they could not reestablish at all. But here they were able to reestablish. They're taking over the control again. Sellers taking first sign. Second sign, not only taking over, they were able to lower the control um, down, and then lower the control down. These are the signs of reversal. So the moment I see this, and also look at this first red candle, long 1 2 3 red candles coming from the order flow zones. All this time no red candles from order flow zones indicator. First time I'm seeing those. That's a sign of the reversals. That's why until you see the signs of reversal, you should not be even think about targets. I want you to, when you are in a good trade, when you are already profiting from the trade, most of the time if you exit prematurely and then seeing the market still moves, you know how much frustration is it. We everybody been there. We are struggling to find the perfect entry, and then perfect stop loss, perfect trade management, and then we have $500, and then let's exit. We have $600, $800 exit, and then if you see the market still going up and up, we get really frustrated. For us, I want you to see in terms of until the market tells you don't, market is reversing, don't exit. That too when a trending market, like when his market is moving, like from the morning it's moving. So why do you want it to exit with a fixed target when the market is continuously moving? Let the market tell you. Let the market tell you with these kind of signs, market run is over. All right. So, all right. So that's one thing. This is why I maximize. Number one, when there is, if you're already in a trade, if you see another trades that are coming up, add a contract, move your stop loss, add a contract, add a contract, and then wait till to see the liquidity zones tell you the reversals, and that means that trend, the run is over, it's about to reverse, or going sideways, exit right now. Okay, so that's why this is the $2,000 run I'm talking about. this is something if you can practice the liquidity zones, breakout, all the things they're talking about. Read the price action after the breakout. Look at all the three cases that I showed you a few minutes before. Practice those things. You'll be able to perfect the entries. Your goal in initial 3 to 6 months is to perfect the entry, perfect the stop loss. That's it. Trade exit. I think you will get it opposite of the liquidity zones. If you see the breaking out from the buy side, you'll see started breaking out on the buy side. Look at this. All this time, breakout happens on the sell side. Not even one buy side green lines were broken. When did it happen first time? Right there, right there, right there. So you will see the opposite of the breakout or this real signs of the exits. Okay, I wanted to show you one more thing before I wrap up this video. The I always say good trading strategy should not only give you the best entries for you to enter the trades, also to best strategy should also help you to stay away from the bad trades. Why? A lot of traders make money when the market is trending. Even a lot of traders who make the money here, they will lose the money on the choppy market like this. Second half of the day was really choppy. Look at this, really choppy. So this is where our trading system really shines in terms of, we talk about in terms of the rectangles. Remember that I talk about the rectangles. When the market is the rectangles, be patient until we see a clear breakout, right? So now apply those rules. I want you to look at the market in this rectangle. That means if you look at initially the sell side liquidity was here, the control was here, buy side. This is the rectangle I was talking about initially, right? I'm talking about. So market moves back and forth. It did not break out below, it did not break it above, just stayed in between. Here is a liquidity sweep. Okay, liquidity. Remember that I'm talking about, take the plus, put the plus here. If you see all the bars above, that means it's not a breakout, it's just going back into the range. That's exactly what it did. And then what happened? The control from here to shifted from here. That means prices didn't move this line. Look at this one, this ones. Look at this. Now this is the rectangle. This is the rectangle. This is the rectangle. Okay. I'll tell you about this one, but look at this rectangle. Markets stayed sideways. It's huge liquidity sweep happened in there. Again, if you follow a strategy, you won't enter the trade short here, you won't enter the trade short here, you won't enter the trade short here. That is how good trading system should prevent you from not entering the bad trades and lose the money what you made earlier. Okay, that's why this system, look at this, from here, almost from here till this time, it clearly helped you to not to enter anything unless you are a very aggressive trader. You wanted to scalp between the liquidity zone to liquidity sweep, liquidity sweep to the upside, liquidity sweep to the upside. A lot of traders do, a lot of our customers do. They love this. I don't recommend for initial 3 to 6 months. Please stick to the high probability trade setups. Learn to see the market in terms of the rectangles. If it does not have a clear breakout, don't enter. It will help you to stay away from the market like this. In this case, you'll be patient. You know what? In terms of patience is most important of all. Don't force yourself. If there is a consolidation, there is a breakout. Remember I told you before, if there is a consolidation, there is a breakout. But the problem is, how long is the consolidations? You won't control, I won't control. Don't force it. Okay. Even in this case, it started like 11 a.m. It went on about like a 2:30. Okay, 2:30 in the chart. And then look at what happened. Look at what happened. Market closed right there. Okay, market closed right here. I want to look at in terms of how the price happened. This sells a liquidity. It's broken right there. Market went back up, came back down, the exact same level where we held the sales liquidity for such a long time. It's almost like 4 hours. This level was held, broken, came back down, and then went up. So I'm saying every time there is a consolidation, there is a breakout. If that breakout, you got to apply the rules in terms of, like I told you, take the plus sign, and then look at the put the line right there. Look at all the bars are below the sell, even though it's broken right there. But even though it's broken, all the bars stayed below. I won't take the trade until it taken all the liquidity fast and it came back down and went up. This is where you can enter. These are the very simple to follow, but you need a lot of practice. That's why we say 3 to 6 months practice every single day, to find out the true breakout, fake breakout, and then if you use the rules that I talked about. Look at this. I place the cursor, plus cursor right there. If it is really a short trade, I should see the bars open and close below this plus sign, this level. But what happened? It took the liquidity, came back into the range, all the bars printed above. Even in this case, it came down a little bit, but there is no, it immediately reversed back there. It immediately reversed back there. That's why reading the price action on the breakout, that's a key. I wanted to practice every single day, get the BHG liquidity zones, and then practice those price action, and then try to, if you make a mistake, end of the day review what you missed, what mistake you made, what did you read wrong, so that review your own trade. That's what is going to make you better. Hopefully that's what I want to convey. But the best way you can help me, please subscribe to this channel. Click on the subscribe button. Once you subscribe, there will be a bell icon. Click on that. You will show it will default, it will go to personalized. I want you to select all videos. Click all, so that you will get all the videos you can share. Also, please like the video, share the video, comment something. You like it, you hate it, or like if you want to pick on me. But I would love to have some feedback on, is there any part of the video that you liked, any part of the video was not having clarity that I can improve on to add more clarity. Please type your comments in the video below in the YouTube. Also, please subscribe to the video, click on the bell icon, choose all videos. Until then, I'll see you in the next trade review or next webinar. Have a great day.